Shawn Anderson, excited to dive deep in this interesting market. Day one of tariffs. Here we go. So getting right into it, I think people are looking for very specific advisors, real estate advisors who are experts in their niche. They've done it before. They know the market. Either it's an asset type, a certain geography, or a certain way to negotiate. Because now you have to be very specific in your real estate journey. Maybe like just a quick intro on, how you got into real estate and how that's led you to be, a top realtor in a very specific niche, which you can tell us all about. Thanks for jumping on.
No problem. So I think you and I met in university, UBC,
Good. Yeah.
somewhere in Sauder. So I studied two things. I studied engineering, which was materials engineering, because I'm really into cars, was and still am. So I wanted to be in that industry. And I ultimately came out with a BCom in real estate. So I have a degree from Sauder in urban land. And then I went into real estate appraisals for 2 years. So that was 2008, 2010. And then transitioned into real estate sales. So I'll be licensed 15 years now. I've been in real estate 17 years and been studying real estate for 21 years, I guess, if you add in that degree.
Totally.
Here I am. Been with two brokerages. It was my most recent one for 8 or 9 years now. And here we are.
Here we are. So obviously you speak from experience. What's led you into your niche? There's so many realtors out there. People are pretty confused on, do I use my mom's sister's friend, or do I go for a stranger who maybe is more of an expert, but I don't know him as well? So I guess, what's your positioning on expertise? And that way I think people can make the job a little bit easier, because finding a realtor can be overwhelming and conflicting. So anything you want to say around guidance on where you specialize and why people like working with you, honestly, over their mom's sister's friend, I think it's important to address.
To be honest, I lose deals all the time to my mom's sister's friend's cousin's uncle. And, that's the consumer's choice that they want to do that. A lot of the time I feel like they are not really thinking through the process and doing what's best for them. They're just doing what's easy for them. But that's the world that we're in, and everybody knows 10 realtors. So, it's up to them who they want to work with. It's a huge financial decision. That's one part of it. But there's a lot of intricacies that occur during a deal that the consumer might not even know about, because it happens behind the scenes, and it's for us to deal with. And that's a lot of where the experience comes from. Most anyone can pull comps from MLS and kind of get a gauge of value. Some people are good at it. Some people are not good at it at all. When I was an appraiser for 2 years, that was my job for 2 years. I worked about 6 days a week and valued, 3 to 7 homes a day for banks and lenders. And, you deal with appraisals all the time, Paul. That's what I did. We do some private stuff as well, but primarily for lenders, validating purchases. Yep. And that's where I really ground my teeth on, learning neighborhoods, product, and how to value properties correctly. So there's that part of it, which is varying degrees of skill levels between agents on that. And then there's also just the intricacies of the deal. If it starts going sideways, or how to, all our contracts are created by the real estate board's lawyers. They're templated, but the fill in the blank section is not templated. There's a lot of terms, clauses that go into those contracts that I have templated over the years from my experience that go into those contracts to, best protect the buyer or the seller. But if you just slap down the general contract from the real estate board, there's you're leaving a lot of holes in the contract for your client. So I think
any examples, nuances on that?
Specific examples. There's just a lot to know about. You got to protect your buyer clients on, their speculation tax. There's another one called the UHT, which is Standard Use Homes Tax, which a lot of people don't even know about. City of Vancouver has a vacancy tax, so you don't want your clients to get stuck with that on the buy side. You might have a subject to sale deal. You want to structure that properly, whether it's for your buyer clients or your seller clients. You want to structure that so it's in their favor as best as possible. It's going to be a negotiation, but you need to know what you're doing. Just even lining up dates, right? I see a lot of contracts come in and they close on one day and possess on the other day, but that client's probably coming out of something. So, they get their money on the 3rd, they pay on the 4th. They give their keys for the new place for their sale on the 4th, but they don't get the keys to the new place till the 5th. So now they're homeless for 24 hours, right?
Right.
You gotta, if you're working for a buyer, you should be structuring these contracts so that transition is seamless. So they should close on the, as an example, close on the 3rd, give their buyer keys on the 4th, then they close then they close on the new one on the 4th, then they get keys for their new place on the 5th, then they give the keys to the buyer for their place on the 6th, right? So you have this smooth overlap, but money just flows, but they're not homeless.
Right, and if that doesn't line up, of course, there's bridge lending, which we do a lot of, right? So let's say you're selling after you actually buy and close on the place you're going to. You're like, I was counting on that money for down payment. So there's bridge loans you can do. Even as there's deposit financing when you first remove subjects and they've got to put $20K into escrow. A lot of people actually depend on that for later. So just FYI, there are little nuances there on the financing side that can make that a little bit more mitigated. But yes, I'm glad we're getting to that little overlooked part of the transaction.
Yeah, there's I think trying to think where the question started, but kind of you want some examples.
Yeah, just the nuances. Yeah, so just like again, like a rookie, well, either a rookie realtor who does not have the experience and the battle wounds that you have will probably overlook those things and rush it, especially volume realtors who are like top realtors, but they're specifically volume based and they're in other words careless. It's important for the consumer to understand what can they call the realtor out for, whether it's the mom, sisters, uncles, kids, dogs, friend, or it's like a top producing guy on all the bus ads. They have to understand, like they don't understand what good is. Kind of like they go to their bank, they're like, oh, that was like not a great experience, but I guess it's the standard. They don't know the standard. So we're trying to educate, like, what is the high standard they have to understand to keep their professional accountable. So you're setting a bit of the bar on what it should be versus what they think is probably like, oh, that's just probably a standard template that no one changes. Again, they'll get that nuance where they talk to you. This would be a 5-hour podcast otherwise, but starting to like really flag some of those items are super important for people to start to be empowered. Because right now there's information asymmetry. Oh, that broker, that realtor, they know more than I do. Are they abusing that? Some people do. Or they're just like, they're not being as thorough as they should. So I think the more you can kind of help people know what flags to raise, that's the most we can do. But yeah, I totally get all those points and there's many more and it's good you're mentioning them. Right? So that's the experience in terms of the detail and the nuance. Now let's assume someone says, well, I've met a couple realtors. They all seem pretty detail oriented. They all said the same thing. Honestly, I'm just going to assume it's good enough. Then it comes down to like, well, who actually is going to help me get the best deal? Who knows the area? Who knows the appreciation potential? Who knows the rental income potential? Who knows maybe the seller's agent if you're on the buying side, and it can maybe give me some detailed information on my bid. Like that's the insider stuff. So what other levers can you pull based off your experience? Ideally give them the best deal with the highest appreciation potential, highest rental income potential based off of your tools, your resources. Give me some stories around that, because I think that's where it gets really specific around a certain niche,
I think another thing to note is just, buildings as an example, right? So if we look at condo buildings, certain buildings, I'm not going to name them on this call, but I wouldn't touch them. They're not good. You're gonna be getting a large special assessment in the future, and resale value is going to be impacted and everything else. So that comes from coming through hundreds and hundreds of buildings downtown. That knowledge is built, and then on your to your point earlier is these relationships in the industry when you're in the sort of top of the industry. I know that term is used pretty loosely in this industry, but when you're in the top of the industry, you tend to deal with the same people all the time. So it's like anything, top 10% do 90% of the deals. So you're going to be working with the same people over and over again, and that actually works to your client's advantage because they know how that other agent on the other side operates. And a lot of the time, we can have these really good transactions where everybody's working together. Doesn't mean we're not grinding for our clients on both sides. But it means that we're all working together for the end goal. I'm not fighting someone, because I need to win, and then we end up imploding the deal because they get frustrated and go away.
Right. So I was going to ask, what's the cost of someone not having those connections? Let's say a realtor who doesn't know the other listing realtor. You're saying that they're going to probably blindly grind on the price and you lose the property altogether. You clearly said that. What else is like a blind spot for a buyer to realize that if the realtor isn't connected, these are the potential costs of it? There's losing a property. What else? Is it them overbidding? Like what other things are like blind spots where that's actually really important? Is there anything else you can highlight?
Yeah. To that point, though, I'm not like, if someone kind of parachuted in from out of town and wanted to do a deal with me, I'm not going to, not work with them. I'm actually going to do my best to put that deal together and maybe even hold their hand a little bit if I need to.
Yeah.
Doesn't mean I'm not working for my client's best interest, but like at the end of the day, we want to execute on that deal. So, there's, market knowledge as well, right? Like, if you kind of from out of town, you might not know these buildings not to touch, right?
Yeah.
You might not know, that there's a, 20-story social housing complex coming up next door, right? Which can impact the values of properties.
Right.
So, the knowledge is really king as well.
Master plans. You read through the community master plan in certain areas with all that kind of stuff?
I read everything, yeah.
Amazing. That's super important. Because, as an appraiser and as someone who knows the master plans, and again, you've done deals in the same buildings, avoid these, do these. You also know, again, the big question is, especially if I'm an investor, Shawn, assume this building is legit. There's no huge, deficiencies with it. Assuming you know the agent, you're going to have the most optimal deal that's possible without me losing the property. I'll trust you on that. Okay, great. I've moved in now. I might want to upsize later. What's the rental potential and what's the appreciation potential? I don't know if there's any specific areas you want to call out that you're bullish on based off some high level, urban changes. But let's talk about like spring 2025, what pockets in the city seem to have the best deal? Either they're undervalued, they're going to be appreciating the most based off some upcoming renovations and urban planning. Like, let's give some details on like what you're bullish on right now for asset type, area, whatever you want to roll with, and even just trends of clients you're working with that are very smart and are probably ahead of the game.
It's I hate to use a crystal ball and make predictions because nobody really knows what's going to happen, especially in this day and age.
Yes.
But I think with anything, you want to, for maximum capital appreciation for starters, if that's what you're after.
Yeah.
Look towards areas with growth, and by growth I kind of mean look for areas where gentrification, for example, as an example, right? If a neighborhood's gentrifying, it's likely going to continue to gentrify, which is going to push values, right? Yeah. Then you can have an area, for example, like Yaletown. Yaletown's totally built out. There's really not much room for any more buildings. Nothing against Yaletown. Yaletown's great. Do lots of business in Yaletown. My office is in Yaletown. But all the buildings are typically from the late 90s when the Concord started building out, up until, the newest ones are in the last few years, maybe at best. But the majority of them are all kind of approaching 20 years, right? So there's not really much more room for growth in the neighborhood. There's, shops and restaurants and stores. It's a great place, but it's, it should probably move in lockstep with the market in general. But if you look at, say, let's go back in time, let's look at the Olympic Village, right? Wasn't too long ago, at least in my eyes, pre-2010, like that was just an industrial, barren landscape. And, it went through a few hiccups over time, but, now it's a very desirable community to be in. And, because it's changed and all that, everything even to the east of it, Concert Properties has, multiple developments right next to it, technically on the east side. They're hitting some of the highest prices in the city when they were selling those. So it's, that if you want to look for something like that, that's something to look at. Look at where, the new St. Paul's is coming in next to Chinatown. You can't tell me that that's not going to drive prices, right? It will, 100%. So I think, those are things to look at, rents. I think from rent, typically, it's, you kind of have nodes of higher rents, peaks. So like downtown is typically like one of those nodes. And then you probably see some stuff out in Burnaby at like the metro towns and the Brentwoods and stuff. And then everything kind of, comes down in between there. Like those are the kind of the peaks. But what a rent's going to do, I don't know. They've softened year over year for sure, but I think that has a little bit to do with immigration, and our economy is kind of in the dumpster right now. So, there's that. They're still expensive. Like, you're still going to pay $4 or $5 a foot probably for unfurnished. Just is what it is. But it's harder to make those numbers work as an investor these days, just with the cost of the purchase price and the cost of financing and everything else, taxes and maintenance and insurance and everything else.
Yeah, definitely. I mean, it looks like Kamloops is in there that can cash flow decently. We're really getting out there. But if we're talking about the tertiary markets, those seem to be the ones that Chilliwack, even Chilliwack is somewhat saturated. There's Kamloops, even Sunshine Coast, depending on the property. Those seem to be quite a bit better just from like a standard long-term rental. I mean, I like the hack, and I don't know if it's that relevant now, but getting the studio or the one bedroom, and it's kind of luxury, and you rent it midterm, and you furnish it, and you charge $30 to $50K above asking. Yes, there's more vacancy risk. Yes, there's a lot more work involved, but there's some of those hacks as well, assuming the rents hold, and you find the right expats, of course. That seems like an interesting one where it's almost Airbnb, but it's not. But it's designed to be for that kind of high-end clientele. That makes you think about like, okay, well, is there a deal to be had in Yaletown for that professional who's in here from 6 to 12 months? They're an Amazon person. Like, do you see any niche cases like that where there's a bit of an opportunity that you've seen for midterm rentals, furnished, going for the luxury stuff? Just on a side note, is that something you've come across at all, or any other opportunities?
Yeah, it can be a little tough on that one. Like, it's short term in most areas, most metropolitan areas of BC, because of the new law, the Airbnb law. Short term is defined as under 90 days now. So, City of Vancouver has had pretty strict Airbnb laws for a while now, but this new 90-day law from the provincial government for secondary residences is somewhat impactful. The short-term rentals, a lot of it is sort of like the sort of midterm furnished short-term rentals. So we'll call short-term kind of like 3 months to 6 months or more furnished. It's softened a bit lately. I know someone that was trying to get their penthouse rented out. I think they were trying to get 12. Took them a while. They got it. They just signed it up last week. But it's film, right? Film's a big driver of that market, huge driver. And we're just not getting the movies like we used to for whatever reason. I don't know the answer to that. I don't know what's going on. Maybe the dollar, maybe tax incentives. Who knows? But I know that's not there. But when that's really strong, that's a big driver of it. And perhaps immigration. We've got pretty immigration's dialed back now too. So perhaps that would negatively, in fact, affect those markets as well. If executives aren't coming in as much. But I do know that they had a tougher time getting that number than they should have.
Sweet. Yeah, ebbs and flows, and again, that's super niche. But yeah, whether it's insurance or it's the movie people or just a lot of hiring sprees, which is not happening. It's ebbs and flows, but I just want to get super niche on that case. Let's talk about quickly subject free. Are you seeing a value to that? So if you go subject free on a place, you may beat out a bid that was higher than you by, let's say, $40,000, assuming it's a 2-bedroom. That's the benefit of subject free. Assuming you're ducks in a row, you've got at least 20%. You know what a B lender would look like if you have to go there. All the contingencies, because there's some risks to that. But subject free can get some great deals. So I'm wondering, anecdotally, can you generalize? I usually see 20 to 40K is that's you can win on being 20 to 40K lower than the next bidder who was 5 days on subjects. You're subject free. Do you see any kind of openings there? Is the market valuing subject free these days because sellers are a little bit desperate? How do you see that sort of, the buyer power, especially if they're being really upfront and aggressive and reassuring to the sellers going subject free? What's the discount usually? Do you recommend it? General thoughts on that, wherever that goes.
Subject free is really impactful when the market is strong. So if we go back to our last cycle, which would have been like 2021, in the height of the COVID sort of era, it was wild. Subject free is, you got to go subject free. There's going to be eight offers on something.
Yeah.
4 of them are going to be subject free. You know what I mean? And what people don't understand is subject free, as you kind of alluded to, is it doesn't mean that you didn't do your due diligence. You just did your due diligence ahead of time. But now we have this new law, this rescission law that the government brought in, three business days to rescind your offer for 0.025% of the purchase price. So you're talking $2,500 on the mail. It's and it's law. There's no way around it. You can't just waive that or cross it out or anything like that. So it's kind of that's kind of softened the impact of coming in subject free, because it's not a done deal now, right?
Yeah.
I mean, people can play. It's not the best law in my opinion. People can play that.
Yeah.
You know, if you can implode a deal for $2,500 and then come back later and rewrite the deal, you know, people do that.
Yeah.
You know, and I think the government kind of forgot that the consumer is also the seller. So, you know, they had their intent, but it's I think it could be done differently. Anyways, different story. So nowadays, you know, everything's a grind out there right now. It's been like this for the last couple of years, other than a couple little undulations in the market. And you know, if you can come in subject free, sometimes for these sellers that you know, they haven't seen an offer yet, and it's just like, take the deal and it's yours. You know, after you wait the 3 days, of course, obviously, it can help. But I don't know if it really helps much more than just bringing them a deal. You know what I mean? There's deals to be had almost everywhere nowadays. The market is tough. It's tough out there for sellers, for sure.
Fair enough. And I know you play both sides. You got to be, you got to play within it. Going into spring, again, like this is something I'm sure will be on your newsletter. Like, what are the main things you want buyers and sellers to know about in terms of timing the market the best way they can? Anything else they should be aware of? Opportunities, caveats? You know, like, let's unload what's in that magnificent brain. Like, you're on the ground every day. What should people know for spring business? You know, your best predictions, things you're seeing, all stuff people can maybe think about and read about before they talk to you. Like, what are your big sort of like headliners right now?
I think for buyers, you know, just remember or just take note that good properties that are priced right, they will sell. Yeah. They'll sell right away. There might even be multiple offers. If it's something special that's well priced, you know, if it's some sort of commoditized condo that's the same as the one above it and below it, next door to it, it's going to be a little, you know, those will probably hang around for a bit. So as a buyer,
what do you see as special these days? Sorry, like just like the patio, the north facing. What are consumers valuing to make it special? I guess you kind of know when you're there, but just some quick like points.
Views win almost every time.
Views, yeah.
People pay for views. They love.
Of course,
views.
So we're in Vancouver, of course.
Yeah. Patios. You know, they get, you know, people like patios.
Second
but
place.
Views,
okay.
If I had to pick one thing, it's views.
Views, patios, anything else? Renovations. What are the things that are being valued by consumers to make it a good property?
Yeah, people like it turnkey. You know, it's especially on some of these bigger homes or condos. You know, you might be like, oh, it's $1 million reno. Well, that's like, it might take you a year to get that done. By the time you get your
got it,
your clothes on it, get your you know, designer in there, you get everything lined up, you get your approvals, etc. People just don't want to. They don't. Maybe they can't wait that long, right? They sold their place, they need all that capital to roll into the new place. Now they got to rent for a year. It's like, nah. But, you know, give them the same property at a higher price with turnkey, then they're more likely to take it.
Right.
You know, but you got to be careful from a selling standpoint when you're doing renos too. You know, you got to reno to the market. You know, just because you like red countertops doesn't mean the market likes red countertops.
And that's very nuanced. I'm sure that's what you do on the seller side. They're like, hey, this place could use endless renovations, but I just think of like a ratio. $1 into new flooring, what is the projected multiple? Does that mean I got to go 1.2 higher on the price? Very hard to have. I ask this a lot. I never get a good answer because I know it varies a lot. But there's, again, it's all about pulling levers. What lever for my target market in my area? It's all situational, which I think most good realtors understand the appetite. For my target customer in this market, what generates the most bang for its buck? Flooring versus new appliances is kind of an obvious one, right? Probably flooring. But just in terms of levers to pull for sellers that you think in this market, generally speaking, are going to have the most impact. Again, asterisk, consult with you for their situation. What's getting them the best ratio, the best kind of bang for their buck on renos when selling? 2-bedroom, let's say.
It's easy. Paint it. Paint it white. Someone wants to change the color afterwards, let them. But don't try and sell your home with yellow and blue and red walls.
Or what not to do, hey? Yeah, I've seen a lot.
Spend a few grand and have it painted. And maybe you don't need to paint the whole thing, but paint. Paint goes miles. Flooring's usually cheaper and easier than people think it is. You know, I think people overestimate. You want to put good flooring down, but It's not that hard usually at the end of the day. So, paint and flooring, you'll get your biggest return. Everything else is kind of like plug and play after that, which is an easier sell to the buyers. Like, sure, it needs new appliances. Call Coast Appliance, call Trail, get them to put some new appliances.
Or Samsung.
No big deal.
Yeah. Got it. Useful. Shawn, what else headliners think we should keep in mind as they're buying or selling going to spring in 2025 and summer?
Selling so far, I think we're gonna, it's March now, so usually the market, it has peaks and valleys. I would say the two valleys are typically December and August. That's just how the market cycles through. Yeah. September, people are focused on family and traveling or whatever they do, and August, people are focused on family and traveling and enjoying the nice weather. So the market usually starts to pump in September, and it usually starts to pump by March. Here we are, March the 4th, and the market's not pumping. But there's a lot of things going on in the background. So I think if we don't really see some strong movement in the market in the next few weeks, it's just going to be a pretty blah spring market. So sellers need to keep that in mind, right? Don't be too ambitious on your pricing, but also, keep your ear to the ground, because typically when the market starts to move, it starts to move pretty quick. I find, buyers are kind of have a lemming mentality, and when one person starts buying, they all want to buy. Right? It just moves like that. So we'll have to see what goes on, but those would be the key takeaways. Like, good things are still going to sell. They're still going to sell fast at all price points. Sellers, don't be too ambitious. Some condos are really hard to sell right now, that's for sure. The investors are pretty well gone from condo market, at least in Vancouver, right? Numbers just don't work. And the more expensive it is, usually the harder it is to sell.
Got it. Words of wisdom. So that was awesome. So we covered a lot. I appreciate it. Things that stuck out the most to me is, just from a tactical level, your experience of, let's call it 20 plus years in real estate, and having an appraiser mentality and having the rubric is huge to tie to your last point around sellers understanding what the property's actually worth. You've got more data to back that up and experience. I'm guessing that works in your favor. Likewise, on a buyer's side, understanding, am I paying too much, too little? That's a huge lever. So I think that makes you super different. Just like categorically, that's awesome. And then, to your points around how to give something the most lift, right? Paint, flooring, don't overdo it. Again, it's helping them objectively see what the market values. Your biggest enemy as a buyer or a seller are your emotions, the right side of your brain, unfortunately. So being able to have people see the objective truth and to then calibrate that, because it'll always be a little emotional, really important, right? Good properties, views, patio in that order, understanding if that's important for you. But what's the trade-off? Is it the view at like a market price, or like a deal, but then you wake up looking at like an alley, and what does that do to your mental health and to your overall happiness and da-da-da? Only you can answer that. Are you giving at least the trade-offs? Subject free, as you said, diminishing returns, but can be useful in the right market. So I think that was kind of interesting. And then, like what areas are gentrifying versus areas that, have already been, let's say, developed. So you mentioned like near St. Paul's, there's probably commercial. I mentioned Kamloops. There's areas where obviously that's where people can only afford. Those are growing. Look at those. I was going to say too, just Yaletown. So very developed. So not amazing for appreciation, but also because there's pretty limited demand based off it being very specific. I would think that if there's suddenly a huge desirability around Yaletown because it's trendy, or there's really good restaurants, or something happens, or maybe that's where the trend's going, because there isn't a lot of inventory, then that should hopefully affect appreciation. Probably not the same as a gentrified area, but I did want to ask maybe a last point on that is if an area is limited supply, like Vancouver is limited supply in general, because it's like, it's surrounded by water. So I wonder if that was a last point around appreciation levers, areas that are in high demand but short supply. I assume that affects the price. Is it also a place that is gentrifying? Well, that's, bonus points. But anyways, you can answer that or not. But just some things that came up to me. Any last thoughts you want to put in as I kind of put in my summary of what we've talked about for the spring and summer of 2025?
Keep your ear to the ground, see what happens, because I don't know what's happening.
Well, I'm gonna keep your ear to the ground. You're gonna tell me what's happening. That's the whole point of today's chat. And I think anyone who is newcomer, an investor, business owner, and or just an upsider or downsider who doesn't love to go knock on doors and look at properties, although they didn't have the time to do it. That's why they hire people like you who are super, in the industry, have the right connections. That's also an important point. And the other realtors means you guys get things done. And again, everyone's grounded by reality, and everyone's on the same team. I know it seems like there's totally competing incentives. Of course there are, but today's day one of tariffs. I think we all have to bind together in some way, right? Even if it is literally buyers and sellers. So I think that's a whole other topic, but it is important just in general to have everyone win, whether it's the two realtors and the buyer and seller, or else there's resentment. There's just I don't know. It's not good for the overall growth of our community. So I think it was a very important point to mention all that. Shawn, you've been awesome, man. Appreciate your time.
Thanks, Paul. Good to see you, buddy.
Of course. Till the next one.